You may or may not have heard of infinite banking before, but if you have, you might have heard the stories of like Walt Disney using it to start Disneyland, or McDonald's, how they were able to get their company going and scale as a result of it. Well, that's great, but are people still using it today? I'm going to talk about Jim Harbaugh.
The Los Angeles Chargers introduced their new head coach, Jim Harbaugh.
And see what he does. So it's interesting, when most people think about getting a paycheck, they think about the typical paycheck that is 100% taxable. But is it possible you can even get yourself a tax-free paycheck? Well, that's kind of what Jim Harbaugh did. Now, Jim Harbaugh, you may not know him. I remember him from the NFL days when he used to play, but then he became a coach. He was University of Michigan. Anybody who's a Michigan fan, you probably know him. He came to University of Michigan, got this nice multi-million-dollar contract. But they didn't just pay him a wage. He asked for something very specific that many wealthy people do and are able to take advantage of. All right, for some of his bonus, this is what he did. Now, he was given in 2016 a $4 million bonus, and then every subsequent year a $2 million bonus thereafter for about 5 years. Now, this bonus wasn't just paid to him as a check. And you can imagine this. I mean, if you're getting paid in the millions, what's your tax bracket like? It's massive, right? And anybody who actually has any kind of halfway decent income, knows you hate income taxes. That's the worst thing you could have. So this is what he did instead. Jim Harbaugh actually had the University of Michigan give him, as that bonus, that $4 million in the first year, a interest-free loan. He was given an interest-free loan from the University of Michigan. That money was to go into his life insurance policy. And yes, this is a whole life insurance policy that's guaranteed, and that's the only way they would do this, if it was whole life, not universal life. But it would have to be a whole life policy where it's guaranteed, because they know it's going to grow. So they're giving him an interest-free cash. Now remember, wealthy people love leverage. They don't mind using quote-unquote debt. Now this is a 0% debt, not nearly as bad. Now some people might still hate it, even if it's 0%. But he knew otherwise, because this money is going into this tax-free, supercharged, high-yield savings account, right? His money is going in. It's also free from creditors and lawsuits and things like that. So he's protecting his money as well. So he's taking this money going in, and again, remember, it's a loan. When you take out a loan, you do not get taxed on it. So this is not like income for him because it's taken as a loan. That money goes into his policy, where it grows tax-free, comes out tax-free. So what he's doing, he's creating leverage off of this loan where he's able to earn interest off of it tax-free, protect his money, keep it in there. Now they did put stipulations. They said, listen, if you leave the University of Michigan, we have to make sure we get our money back at some point, especially if you die. So the agreement is that either he has to pay them back, whatever he has, so he has to keep a balance to at least pay them back the money they loaned him. But remember, he's just earning interest off their money. He's literally becoming the bank. Just like the banks take your money and pay you almost nothing in interest, he was doing the same exact thing while taking that money. Now, it's not clear what he did to invest with it as well. He might have just let it sit there and earn interest and been happy and been just fine. But obviously, he still had the ability to go and take this money and use it to go and invest. Specifically, because he's using his own dollars to put in as well, so he's throwing in his own dollars, plus earning money from their dollars too. He's able to take his money as well and use that money. Now they do say in the contract, they did say, hey, you have to make sure that the money you owe us stays liquid if you ever leave us. So he had to make sure he didn't touch their money. But all the interest he's earning off their money, that's money he can then use to go and invest and do other things with it as well. Whatever he pleases to do, he can do it. He could literally pay himself tax-free interest income from that forever if he wanted to. So that was the deal. And even if he died, of course, they'd have to be able to pay back to the university at his death, coming out of the death benefit, and then the rest of it goes to his family tax-free, which is way more than the death benefit that would pay back to the university. So he's creating massive leverage of cash value, that tax-free savings account, and leverage of the death benefit to create more. So what's brilliant about this, if you really sum it up, is that he was able to get tax-free income. He was able to get tax-free income because, again, he was given a loan, which is not taxable, growing in this tax-free account, right? Tax deferred, comes out tax-free, able to grow it, create more leverage and arbitrage off of that money by earning more than the 0% they're charging him, right? So he's able to earn interest off of their money that they borrowed to him as a bonus versus typical income. And of course, this is able to set up his family for generations to come as well. How brilliant is that, right? Is that he's able to create that leverage. And guess what? Although you might not be getting a 0% loan from your employer or from your business or wherever it might be, maybe you're not getting that. But you still can take a lot of the same advantages because, again, you can still do the same thing. By the way, this is called a split dollar plan, just in case you're wondering. That is something that you can actually set up with using whole life insurance. If you have a business or you're a part of a business, you can split it up to where you're both contributing to it, much like people contribute to a 401k, get in the match. You can do that with life insurance too. Now, the great thing is you can also get your own individual plan. You can actually get it set up and leverage it however you want. Again, this is money that I put in because I keep my cash reserves here, the bulk of it. Now, I don't keep that much money in the bank. I keep some in the bank, but I keep most of it here because I'm earning 6% a year tax-free, right? I'm able to keep that money protected from lawsuits of creditors. It doesn't matter if I have millions stored in here, no one can get to it. Where my savings account, they could. And then of course, I can use this money especially to start creating wealth now. I can actually take this money, leverage it, and use it to create passive income, right? And I love passive income. That's obvious. And so I can now use this money to create wealth today versus waiting for that someday retirement. Forget that. I can actually go and invest with it right now, creating cash flow right now. And I can have the cash reserves. I can have the stability for my family to protect my family, protect in case of the worst things would happen, but also expect the best and be able to use it for the best as well. If you want to know how you can actually make that work in your own situation, because everybody's situation is different, but you can create a customized plan to you, book a call with us today at moneyripples.com/infinite-banking, and we can get that going for you right now.